Hello, hello, hello. Happy non-farm payrolls Friday. How's everyone doing? Managed to squeak in this live stream. It's going to be a little shorter, so and we're not going to get to look at individual stocks, so we'll have to do that next week at some point. Good morning, Sterling. Remember, next week I am moving. Hopefully there'll be a live stream on Monday, and then I can dismantle all my stuff. There will definitely not be one Tuesday, and Wednesday could be questionable. We will have to see. So that's where we sit. Again, good morning, Sterling. Sterling putting in all the non-farm payrolls. Remember, this is the one that has the most revisions from all year. So we had stuff like November, December revised higher, other things revised lower. We have Neil Kashkari, or as I call him, Cash and Carry. The rise in the 10-year could be from deficits, and he says the rise in the 10-year is not worrisome. They talk about, oh, this is why. First of all, we should have all these Fed speakers anyways. We should just get rid of the Fed. Or if not get rid of the Fed, have a rule you're following. Because it's all over the place. It's a clown show. It's been a clown show for years. Now they just like to hear themselves talk. Uh, so yes, the numbers came in a little lower, but unemployment rate dropped. Average hourly earnings. We'll get to say hi to people in a second, but average hourly earnings. Let me just rearrange a couple windows here. Also, still 4.1 year over year. So that is turning into a very sticky number from an inflation standpoint. But weekly hours also dropping again. Interesting enough, participation rate ticking up. What does the market think of it? Well, so far it's still holding that key area I talked about yesterday. So we're going to have to see. That's what I am watching this morning. Good morning, McRangers. Hey, thank you for tuning in, Bull Strike Cheetah. They're big fishes. There's no big fishes here. We're just people analyzing the market, and I've been doing this since 1992. So, been around the block a long time. Getting old. Good morning, Mark. Good morning, Patrick. Good morning, Jacob. Good morning, Ted. Good morning, Richard. Might be a little lighter in attendance because people did not know if I was going to show up today. I tweeted out yesterday. Remember, if you're not following me on X, at MG Arnold, to know, because I tweeted out yesterday there would be a stream today. All right, let's just get through this. So I have to go deal with some things. Also, remember, to new people or people in the background, you do not need to trade every day. You wait for good setups, you wait for your setups, and they might not happen every day. That's one of the things that gets most people in trouble. And I've talked about before, Friday, if you have tracked my results for years, historically Friday, especially after about European close, I don't even bother because my success rate goes way down. So if your success rate's down on certain days or certain market environments, don't trade them. Don't trade them. So what else do we have? We already had Kashkari speaking. We got Bowman coming up next. Do not ignore those. These are the preliminary numbers for February. Do not ignore the inflation numbers. Okay, so we're going to see, because this is the first. We've now had Trump in office. We're going to see what the consumer inflation expectations are and the consumer sentiment. So do not ignore the 10 a.m. numbers, especially coming out. It could put a slight pivot in the market. Then you got wholesale inventories, and then you got Goolsby speaking and Kugler. So big day of Fed speak today. So far, the S&P 500. Now, Amazon reported yesterday after the close, and the guidance was not good. This was off at 7%, over 7% at one point, but it's been buying the dip. It snapped back, and now it's off slightly, 2.86%. That's pretty much your only negative overall. Apple and Google minorly down. Tesla did finally has broken key support, as I was talking about, looking for rollover plays. Consumer cyclical, thanks to Amazon, is the thing that's big of negative. And energy, we finally hit the 50% harmonic. So, but we have not triggered a major solid buy pattern yet. Fed Watch tool. Again, we'll see if this shifts with more Fed speak today, but at this point, after non-farm payrolls, we only have one cut priced in. So it's back to one cut priced in, with a second one not until a year from now, over a year from now. Fear and greed still in fear. Show PE still above 38. That's really about it. In terms of earnings this morning, not really anything that we need to look at that's going to be market moving. Good morning, Royal Palms. All right, so as we talked about yesterday, we had some volatility off the number. We started to break above. Yesterday, remember, these are not brick walls. I said we'll get 6106.50. You know, it topped out there, little peak above there at the close, and then a rotation back down. Tried to get above there in the Asian session, and then trying to hold it right now. Again, this area. So if we hold this area and we have a strong tick opening, then what would I be looking for? The next key area for me is 61.28 to 61.33, then 61.37. There's a lot of key resistance up there. So those are the areas I'd be looking to if this can sustain. If it does drop, my first major support was right near the spike low from non-farm payrolls, which besides this little brief dip was also the key support level from back on Thursday. So that's the first key level of support I'm looking for. And then below that, it's really about 60, 67. All right, overall, the short-term trend is still up. We are getting to topping areas on the weekly and to topping areas on, getting closer to topping areas on the daily. But that does not mean today. Okay, unless something major happens and we start breaking below this key level, cannot get anywhere bearish. 60.88 for me. Hello, Charles. Thank you for tuning in. NASDAQ up. I remember I said yesterday I was watching the top of the descending channel, which we bounced off earlier today. Little run up, bounce off there. If we take this out, if we do take this out, then the next key level I'm looking at is really this 20, it's roughly 22K. 22K, the 75 harmonic, and this little topping area is 22K to 22,050 technically is the area I'm looking for. The key support at this point on any pullback, I'm looking at about 21,700 as key support. So Dow, hold on one second. Dow, nothing much has changed. We have the bigger potential double top pattern still in play on a minor levels. We're looking at right around 44,775 as key support. And if it can sustain, if it can sustain above about 44,860, we still have a potential target of 45,100. Russell, a little reaction there, but caught in the same range here. We still have not confirmed the double and may never get confirmed. I'm keeping an eye on yesterday's high and low in the Russell. VIX, after non-farm payroll numbers, continues to drop. Remember, as I've talked about, my big thing, my theme this year will be when volatility starts getting cheap to look long vol for potential spikes because of the Trump effect. So this is an area, especially if we make a topping pattern, which we do not have yet today. This is an area I'd be looking for long vol, but again, not necessarily today. DAX coming up to the next harmonic yesterday and pausing there. Double is still in play unless we take out 22,100 roughly. Just remember that number. Then the potential double will be off the table. Just because there's a potential double does not mean you go short or anything. It's a long way off from triggering, and there's no front run yet. Notes after reversing off the 62.5 harmonic, the note futures headed down. So after this non-farm payrolls, yields are continuing to climb again. So could not break above here, and this making a very lopsided double top. So key levels, you know, it's just coming back into key support. That's just a little, it was not even really tradable unless you were very nimble. The yields, there was not a double bottom here because this little spike took it out, but now we're back to roughly 4.5 is the key area I'm watching into the rotation zone. By the way, this was an aggressive percent beat buy on a break of yesterday's high, but challenging to trade because headed into the rotation zone, and reward to risk was very, very tight on that. As Sterling asked, I will not do anything less than 1-to-1 on reward to risk, and that's not even my preferred. It's 1.2-to-1 minimum to the first target. Dollar index, still a whole lot of nothing, but we have a minor sloppy double bottom pattern. Would need a close on at least a 4-hour basis above 107.72. Okay, so that's the only bounce play I'm looking at right now against a very, very key support level. Remember, though, if this does not trigger and it rolls over and we close on the downside below 106.58, it triggers a substantial double top pattern. Good morning, Daniel. Good morning, Heinrich. Crude. On the 4-hour, this is an ugly stair step double, a long way off from triggering. It's still technically valid, but in the short term, this thing has to prove itself above 72 bucks from my perspective, because we're against the daily rotation zone, and the declining 8 EMA is key resistance that they're at the prior support becoming resistance level. So that's a weak pattern set up, but the only thing I'm watching now is if it can regain 72. Other than that, we finally hit the 50% harmonic. But as I've talked about, I'm looking for a more substantial bottoming pattern between this 70.50 area and the 68.30 area. Why so wide is because that's a major key support area between the two harmonic levels and very key support. If I had to fine tune a level lower than the harmonic, I'd be looking at closer to 69.50. Natty gas, still not much to talk about there. We're back to daily cycle tops. So next week, I'm still going to be watching for another rollover play there. Gold, we do have, again, a minor potential double top pattern. May never trigger. Would I go short this? No. I would not short this with Coco's money. These would be levels people keep asking, where could I get in gold? Well, I'd be looking at if this were to trigger at pullback levels. So far, we're in a sideways correction. So if it were to trigger, be into the daily rotation zone, which remember shifts the probability slightly lower. So I'd be looking at this for potential buying opportunities. And then we'd watch for the secondary reaction, because the only negative thing about gold right now is we are at major cycle tops and very overbought. So we're definitely in need of a pause or some kind of minor pullback correction. What else do we have? We have the yen breaking down earlier, finding a little key support, but still going to be watching for more rollovers here unless it makes a bottoming pattern, because we still have a magnet price now of about 150, right around that 87.5 harmonic. So going to be watching for a continued little pullback in that in the short term. Euro, we still have the major potential double bottom pattern that might never trigger. That's the only thing that gets me bullish on the euro. Otherwise, there's nothing. There is nothing just yet. Spiders. This has, remembered, is confirmed but did not trigger the double top. Gotta wait for the trigger. Or if you're trying to front run it and it doesn't trigger, you don't carry the trade. You only carry it if it triggers, from my perspective. Again, all this is from my perspective. Right now, pre-market, slight gap up from yesterday's close. We're trading 607, 606.32. So on any pullback, 606.32. And then your major support is 604.50. Still that I'm watching at this point. Then if we take out 607.40, I'd be looking for key major resistance is 609.80 area. The Qs, again, slight gap up. So on any pullback in the open 529.60, your major support levels right around 526.75. And if it runs up, your key target, first key target for me would be 533 and then 534.22. Yes, so you want to wait. What I like to do is, because the markets, I mean, he could come out with anything, but I don't want him to be buying something that could drop a lot lower. So I'm watching, especially if we start getting into topping patterns, because then we could get a little spike in the VIX. But that's going to be the overall, as long as VIX keeps dropping down or whatever you look for to VVIX, once we get to complacency, uh, that's where I like to structure plays, especially options plays with being long vol. I do not want to be short vol in a structured option play for whatever it is, because we can get those out of the blue spikes in volatility. What else do we have? We have Bitcoin still holding this key area and now bouncing back up today, but no long-term pattern shift just right now. It's still technically a double top, but it could turn into just a horizontal channel. Tesla, the potential double, again, not traded because it never triggered or confirmed, and now we broke down with a really separating rotation zone. So any bounce plays in this, I'm watching for rollover plays. Over the next couple months, looking for a reconnect with 270 at least. Nvidia trying to regain a support level, but trading right against there now. I'm still watching for rollover plays unless it can regain and hold that and prove that this now has become support again. It's been on a little massive buying spree with the whole let's just buy up everything recently. Just like Avgo is back into a major just sideways channel after its key buying spree. Copper now is breaking out, which is actually, that surprises me. But you got to trade what is. So on any pullback, 445 is now very key support. 445, and if you're looking for a higher target, I'd be looking at the 50% harmonic. 467 would be a target that I'd be looking for at least to take your next action. All right, that's really about it. I got to keep this one a little shorter. Just into the open, this 6106, 6107 level, I'm watching to see in the open if this holds support. Worst case, 6100 to 6101. If we drop below that, I'm not looking to do anything on the bullish side. If we hold above 6106, 6107 and can keep that as support, the next key target, remember, as I talked about, is the 6128 area or slightly above that. We are going to have to do it on Monday, Royal Palms. Okay, sorry about that. I have to run. Thank you, everybody, for tuning in. Thank you for everybody new who's joining the channel, and I shall talk to you all later. Bye for now.